usually when things change, whether it be the economy, whether it be markets, or whether it be empires or the balance of power globally, guess what else changes? Money changes hands. So it's a pretty exciting time to be involved in a lot of different places.
Hey there, everyone. It's your host, Michael Matthew, here with VIP Financial Education YouTube. We've got a really exciting video on here today. We've got Mr. MC Laubscher here. We continue to bring MC here on the channel, not only for his obviously smiling face and fantastic demeanor, but he is just an absolute wealth of knowledge. I talked to a lot of folks, in different kind of verticals in financial solutions and things of that nature, and you always tend to be one of my favorites. We can just kind of riff on everything. We go in with very, very little agenda on these other than maybe just some talking points. And I love how we just, through the dialogue, can really flesh this out. So thanks for joining us again, MC. Kind of tell us how the new year's kicking off for you so far, and welcome back to the channel.
Thank you so much for having me. Been looking forward to our conversations. I always love our conversations, and your audience is fantastic. I've gotten to know a lot of them throughout the years, and there's some incredible people watching and following your channel. So always enjoy this. The new year's been fantastic. Had a great time with family, friends. It's off to a banging start, keep it nice and busy. Again, we live in very interesting times. A lot of dangers out there, but a plethora and an abundance of opportunities. So it's a pretty exciting time for an investor to be involved in any market right now. Because we've gotten to a point where we are within economic cycles, market cycles. You could talk empire cycles too, if you think geopolitically throughout the world. So there's a lot of things changing, and usually when things change, whether it be the economy, whether it be markets, or whether it be empires or the balance of power globally, guess what else changes? Money changes hands. So it's a pretty exciting time to be involved in a lot of different places.
Yeah, no, and I love your disposition on that, because a lot of people are just kind of, there's all this white noise that's out there right now, not only in, real estate space and, all different types of asset classes. I mean, politically, there's just so much out there. It's, people are looking for, kind of how to put a positive spin on that. And as an investor, you really have to, you're going in, you're looking at the trends, you're following the trends, you're getting ahead of those trends. That's when you can really make, substantial wealth, is when you get involved in something before the masses do, of course, right? So what kind of trends are you seeing out there right now? What are you really following, and what direction do you see that those are going, and how are you trying to position yourselves out in front of them?
Yeah, I would start with the first thing that you need to do as an investor, and this will really help you. And I know a lot of folks have, in some way, shape, or form, hit on this, but it's so important that everything starts with you. The risk is never in any investment or in a market. The risk is in the investor. And I know, again, it sounds like a cliche, but it's so important. The fundamentals, the basics, it's you. So make sure in 2022 that you're mentally, spiritually, and physically as strong as you've ever been. So what I mean by mentally strong is understanding, that you're the asset, developing that, number one, but also work on different intelligences. An intelligence that's going to serve you in 2022, just as it would have served you in 2020, is emotional intelligence. And what I mean by that is, we get very emotional. We're emotional human beings. That's why we cry in movies, and we get all, happy when we listen to music. That's just
you might cry in movies. I don't cry during movies. Just
I bawl my tears out. All the Disney movies with my kids, I bawl my eyes out. No, so we're emotional beings, and you have to understand that, be aware of that, because if you are aware of that, then all of a sudden you can intentionally focus on not being pulled emotionally into certain areas. So as an investor, I can't think of a bigger advantage that you could have is increasing your emotional intelligence, because the trends that I'm seeing is it's going to be very chaotic. I looked at 2020 before any of this happened. And in 2020, I said it was an election year. it feels like every year is an election year in the
I know.
US, right? Or in the world for that matter. But it's an election year, which means that it's going to be chaotic. And there was a lot at stake in 2020. So I looked at 2020, I said election year, presidential election. There's going to be, the emotions are going to be through the roof. There's going to be a lot of divide and conquer, divisive stuff, right? The media, turn that stuff off. Doesn't serve you at all. Don't get sucked into any of that, regardless of what channel it is. So there's going to be a lot of that going on because they want folks emotional. Because if you're emotional, you don't think clearly, you don't make good decisions. So it's going to be, that's the environment that investors are going to be in. And again, in 2020, same thing, election year, a lot at stake. We're already starting to see the divisiveness and the tactics on both sides. And they do that because it works. It works. So they're going to get people emotionally and get you sucked down rabbit holes. And it's the same thing with markets. You know, it's almost like financial news has adopted, you know, this mainstream strategy of news. I look at stuff and it's just fear-driven, fear-driven, fear-driven. What's the Fed going to do? Oh, are they going to raise rates? Are they not going to raise? It's almost like I'm watching ESPN, right? When you're watching financial news. It's like, oh my goodness, is Tom Brady going to start? His hamstring was tight the last time I checked. You know, down on the touchline is this person. What do you think about Brady's hamstring? It's essentially that type of tactics within the news. And
how's Jerome Powell's knee doing this morning, right? I mean, basically the same thing.
Exactly. So a lot hinges on that. And then, you know, every other person also from a marketing standpoint, you know, and this is good to know from an investor psyche is you're being marketed to. So in a world that's so crazy with so much stuff going on, how do you catch attention? Well, you have to make crazy statements just to get attention. I mean, there's some folks that were suing the federal government on mandates before it was even like out there, just to insert themselves in the conversation, right? In the investment world. But essentially, you need to be aware of this mentally and don't pay attention to any of that. Don't get sucked into any of that. Keep a calm, cool head. Look at the marketplace for what it is. Look at the economy for what it is. Focus on your craft and what you're doing. And when you do that, you're going to see so many opportunities that the majority of people, I would probably say 99% of the people are not going to be able to see that. So that's a trend. The first thing is political election. The second thing that I'm seeing is inflation. Inflation. It's not going away. It's not going to get any better because essentially, you know, where we are right now, the central banks have their backs up against the wall. They've cornered themselves. So will you see rate increases? Nothing meaningful. They can't do it. And if they do that, there's going to be a quick response in all markets. So I see inflation still being a trend, and there's ways to play it, obviously through real estate and through different assets. You know, and the other trend that I would also say is disruption. And what I mean by disruption is, well, have you been to the grocery store lately? Supply chain disruptions. It was bound to happen. We've been talking about this for quite a bit. When we literally shut down the world's biggest economy by pressing a button saying 2 weeks to slow the spread. And then since then, it's been stop, start, stop, start, stop, start. Some areas, yes, have opened up and their economies are booming. You know, Florida, one great example of that, right? Texas, you know, folks are moving to those states too. I mean, Austin, look at what's happening in Austin, just in Texas. So yeah, there are some areas that plugging along, but for the most part, and we're so connected, I mean, so interconnected, and supply chains are going to be disrupted, which will disrupt everything, supplies, food supplies. And then of course, another theme in the disruption was the mandates. Yes, it went to the Supreme Court and they made a ruling, and folks think, yeah, that's not really something to pay attention to, but there's an effect, which when something happens, it's like a ripple effect, right? That ripples through the economy. So sometimes when something happens, before it even went to the Supreme Court, there was a lot of disruption already, a lot of disruption in corporations, services such as law enforcement, the firefighters, healthcare, and so forth. That impacts the economic environment that investors operate in, because all of a sudden, I mean, it was, and again, the numbers, it's tough to get accurate data these days because there's so much misinformation. But let's just hypothetically say a third of your workforce in certain areas essentially stopped working and is no longer there. Well, how does that affect your hospitals? Pretty much affects it big time. How does that affect law enforcement? How does that affect corporations, businesses, and so forth? So there will be disruption, but again, starting with a cool, calm head, mentally, spiritually, and physically strong as you can be, you're not going to get sucked into the narratives. You're just going to see it for what it is, and then you'll start to see the opportunities as they arise within the economic environment.
Yeah, I love that. And I want to go back on something you said a few minutes ago, used a word that I love, intentional, being intentional and not, it's almost like you kind of have those blinders on where, you've got these goals in front of you and you've got kind of just a very simple chart that you're going to share with us here in a few minutes. And you showed it to me offline, and it's brilliant. It's brilliantly simple. But being intentional with your time, kind of getting away from that white noise, getting out of the media. I mean, those things can just bog you down so quickly. So I prescribe to that as well. Not being emotional about doing business, to me, and it sounds probably fairly callous, but at this point, I kind of am. It's doing business and housing and real estate's my background. Those are widgets to me. I have literally zero emotional attachment to them whatsoever. I'm not living in the house. In most cases, I've never lived in the house, so for me, it's very transactional, and I can have those blinders on where I'm removing all emotion, and it just breaks down to a math problem, right? Yep. And when I'm just looking at a math problem, there's a right answer typically, and there's a wrong answer. So removing that emotion, particularly removing fear, because like you said, that is like the mainstream kind of legacy media's, that's their entire job right now, is just scare the daylights out of everyone, so that everyone's afraid to leave their house. The economy is going to continue to be, the way that it is right now. You touched on inflation. I love that transitory is now a word of the past. They were throwing that out there for a while. I don't know anyone that was really in the know that really bought into that, because again, looking at the trends, you're talking about the supply chain issue. I was in the grocery store last night. I was making a simple caprese salad and I needed basil, just fresh basil, something very basic that you can find in every grocery store's produce section. And not only was the basil gone, but every other, fresh herb and for the most part vegetables were wiped out, and same thing with all their shelves. So we're at a 40-year high with inflation right now, sitting at about 7%. We know that the interest rates from obviously the Fed are continuing to prop the economy up, keeping the real estate market propped up. We're overdue for a correction. It's still continuing to trend upwards. The central banks are backed into a corner. What's going to give? I mean, at some point, you would have to think that interest rates are going to have to be increased, obviously, to rein inflation back in. Are you seeing any signs of that right now? Do you prescribe to that method of reining in inflation, obviously, by increasing those interest rates? And if so, what happens to the real estate market?
So if they raise rates, markets will crash. Just speaking of raising rates, look what it did to the markets. At the time of recording, the previous day it fell 500 points. And I mean, like I said, if there's any rate increases, it will be very minimal. It will almost just be,
almost symbolic, if you will.
It's going to be symbolic. One thing to be very, very aware of and cognizant as an investor, and here's what I do too. A lot of folks say, MC, you stay out of the news. Where do you get your information from? So I subscribe to a lot of newsletters. So yeah, you're going to unfortunately have to pay for information. Otherwise you're the product, right? We're the product of the legacy media. They try and get as many of us to watch them so that they can run ads to their real clients, to us. But if you're paying for information, without ads or any of that kind of stuff. You're actually the client. They're producing content for you. So there's a lot of information that you can act on that. And have differences of opinion. Don't just subscribe to everything that fits in within your echo chamber. And the reason why I'm sharing that is folks have seen a strengthening in the dollar index. So a lot of your viewers might be, well, how is that possible? You know, we've created all this currency. There's inflation. How is the dollar index actually gone up? And there's a gentleman that has a theory called the dollar milkshake, Brent Johnson, which again challenges your thinking of dollar devaluation, dollar crash, you know, and so forth. But one thing that you have to realize about the dollar and why it's essentially doing that right now at the time of recording is the US dollar is still the world reserve currency. You know, and I always say that to folks, well, I said, it's still the world reserve currency until it's not, which means number one, there's a demand for it. Countries and their central banks have to hold US dollars. And of course, we could get in a whole different conversation of, are some already holding less and so forth, but that's a different rabbit hole. The point is, it's still a reserve currency. They still have to hold it. There's a demand for it. There's no demands for Brazilian reals and South African rands and so forth. So the whole world has increased their currency supply in every single country. So the dollar, because there's a demand for it, has actually seen it strengthening relative to other currencies, and is still quote unquote seen as a safe haven when it comes to financial markets. Now, eventually, it will have its day. It could be inflated, and there will be a point in time when that turns. And that point, I believe, is the theme. There will be confidence. That's what happened in Weimar Germany. There was a massive increase in currency supply, and everything was going until the confidence in the money was gone. And then people would rather have things than the money. Same thing as in Zimbabwe, same thing as in Venezuela. But we're not there quite yet. So as far as the Fed, yeah, they're cornered. I don't think that there will be any significant. It will just be symbolic. There will be inflation. You know, it's terrible for the economy because essentially it's going to lead to a very bad economic and financial situation for the majority of folks. But I want your viewers to be on the right side of this, to position themselves and benefit from inflation like the rich do. That's why you have more millionaires than ever, more billionaires than ever right now, because you can position yourself in this crazy world to be on the right side of the money moving, because as things are changing, money's changing hands. So I want them to be on the right side of this.
Yeah, no, and I love that. And, you know, everyone or most people that are watching, you know, they're watching from an investor standpoint, which we have a lot of investors here on the channel that are looking for information, education, guidance, whatever you want to call it. But they're also watching from a consumer standpoint. I mean, right now, the biggest three are going to be, you know, it's going to be housing, transportation, and it's going to be food. Those are going to be really where general consumers getting hit hard in the pocketbook. Now, we had really a high increase in wages last year. I think one of the biggest increase, if not the biggest increase in the history. But when that is offset by inflation, you know, they're actually coming out in the red on that. So I think I read the other day, and I wish I would have written it down so I could source it, but the average family, even with that wage increase, is underwater $1,500 year over year from last year based on inflation. So a product or service that cost you $100 last year is now costing you $107. Well, if that's across all, you know, kind of verticals like transportation, like food, like housing, I mean, that is just lighting people's checkbooks on fire right now. And everyone's just kind of looking for that end in sight. How do you see it kind of coming to terms, and at what point, you know, do you think there's going to be a slowdown there so that people can kind of stop, you know, living in that kind of panic mode?
Yeah, I think when that stops is if there is a wild card that produces a deflationary event. Unfortunately, if we just keep tracking the way that we're tracking right now, they have their back up against the wall, folks. They're going to have to continue to expand the money. But if there is a wild card, a deflationary event that comes in, then you're going to start to see some relief initially. And we all know what governments and central banks do when there's a wild card, like For example, let's just say the debt market blows up, or
yeah, I was going to say rattle off a couple deflationary events that our audience can do some research on.
Yeah, so let's just say, for example, the debt market, which is the biggest market in the world that keeps inflating, which fuels all of the equity markets around the world and the real estate markets, by the way, and is basically keeping economies afloat, because the real economy, every single person that goes out to the store here, in any store, knows the real economy is essentially just plummeting, really in free fall. So deflationary events is a debt market can pop and blow up because it's a massive bubble. That will have a huge deflationary effect. It could be stock market crashes. Real estate markets could crash from that. Commodity markets, essentially, and crypto too, initially, right? Crypto will get hit hard because it's very liquid. So yeah, so something like that as a wild card. You could have, a power failure, a grid down like in Texas. You know, when I used to say things like this, people used to laugh until that happened in Texas.
Right.
I think our systems are very fragile, all of our systems. You know, think about big cities, the wear and tear in big cities. What do you think their the electrical system looks like, their plumbing system and so forth? So a grid down scenario is not far-fetched after everything that we've seen. What about a banking crisis? We've seen several banking crises. We already, you know, people listening to us or watching this that are in Lebanon or that are in Turkey, they go, yeah, we already have them, MC. You're late to the party. We've already had our deflationary events. So yeah, so you could have those events. I mean, there's a lot of war, for example, could break out. Geopolitically, there's tensions in Ukraine, there's tensions in Taiwan, which again, it's fight or flight, fear. People contract at that stage. They stop spending money. Everybody goes into preservation mode, which essentially will really, really contribute to a falling economy. So there's a lot of deflationary events that would eventually stop it. The reaction of the governments and central banks to that could be more dangerous than anything, just like it was in 2008 and 2009. Had they just let the economy self-correct and have all of the bad investments and malinvestments clean itself out, we would have been in a different state right now. But they reacted by bailing out everyone except Main Street, right? Financial institutions and corporations, and then also increasing the money supply. So that's how I see it would stop.
So you're saying dumping trillions of dollars in stimulus money into the economy was probably not the right way to keep inflation down?
It's and that's the thing. I think the average person didn't quite grasp it when it happened at the time, when they received their check directly from the federal government, that it was a bad thing. Most people would say, oh, come on, it's not a bad thing. I said, this is going to hurt more. This is delaying the hurt, because the money that they're getting right now is not going to be able to buy a lot in 12 months, 18 months, 24 months. And it was within 6 months you started to see increases, right? Folks started to see it. So it even came sooner than that. Look, the money supply has been expanding for a while in the US. There's different tactics that they use to kind of offshore inflation, but they're running out of options. I mean, folks listening would say, well, MC, what are some of the examples? How did they offshore inflation? Labor. They went overseas, whether it be China, other countries. A lot of the manufacturing and the labor was outsourced there. It didn't stay in the United States because it would have seen an inflationary event with regards to paying people. So labor goes up, it gets offshored, inflation kind of stalls, right? And then, of course, the way that they calculate it these days is not even close to how they calculated back 20, 30 years ago. There's a newsletter that I subscribe to for John Williams' Shadow Stats. If you want to get accurate economic data, he just breaks it down how they used to calculate it before all the shenanigans. You know, the joke is if you want data, if you torture data, it confesses. So there's a lot of torturing of data.
Yeah, no, I appreciate that. Guys, if you like what you're hearing, you want to talk to MC and his team about some of their investment strategies, we're going to keep going here in the video. But if you know you already want to have that conversation, go ahead and drop an email to ninja@vipfinancialeducation.com. That's ninja@vipfinancialeducation.com. We'll drop a link to that below. We're also going to drop a link of MC's previous playlists here. We're going to talk about infinite banking here in just a minute, but he has talked on our channel multiple times about that. It's a great time to get some knowledge on that, particularly with the inflationary times that we're in right now. Just a couple stats, and in regards to this inflation, gas up 58% year over year. 58%, that is unbelievable, which is the largest increase year over year since 1980. Guys, everyone gets affected at the gas pump, unless you've got the electric vehicles. The people that are kind of the naysayers on inflation, probably the same people that started using the word transitory when it had no meaning in the conversation. We all knew that wasn't going to come, are starting to talk about base effects. Right, so they're saying, "Oh, it's just the base effects of either being in a pandemic or now we're coming out of the pandemic. You can't compare apples to apples. It's actually apples to oranges, whether it was pre-pandemic, during the pandemic, or we're still in the pandemic, but people are saying we're coming out of it." Does that base effects, does that hold me water, in your humble opinion?
No. So what I would say is the folks that are making all of that statements, and side note, brilliant marketing from the Fed, by the way, whoever writes those speeches. I mean, I give credit in life where credit is due. You got to hand it to them. They were essentially handed this information. They go, "Oh, how do we present this in this manner that," and puts a positive spin on it. So transitory, what a classic.
Right.
But yeah, base effects. No, what I would say is the folks that are making these statements and that are in these positions of power, they don't live like all of us, right? They don't go to the grocery stores, I'm assuming, themselves, for the most part. They're not out in the economy. A lot of them are on bubbles, whether it be New York, or whether it be Chicago, or whether it be LA. They don't live like we live, right? In just regular America, in the economy, boots on the ground, as they call it in reports. So I think they've lost touch a little bit with how most people live, the challenges that people have, the challenges that companies and small businesses are going through right now. And as an investor, because you are with your boots on the ground, living in the real world, as I call it, in a different reality from these folks, and you're living, within communities where there are small businesses, where there are things going on, you have a competitive advantage, number one, because most people believe what they see on TV, and it's absolutely not reality. So as an investor, you having boots on the ground and living in the actual real world gives you a big opportunity to take advantage of politically distorted positions or situations. And there are many of them right now.
Yeah, and just to kind of go back to what you said earlier, we love to give resources here to our channel audience. You mentioned, or you kind of touched on, some newsletters that you subscribe to that kind of paint both sides of the picture, if you will, so that people are getting kind of an accurate depiction that's unbiased, really, by the time they're doing the research, and they can take facts and do their own kind of critical thinking and, go down that rabbit hole and come out on the other end kind of having a little bit more information. What are a couple that you would recommend? Now, you said some of them are paid. I'm assuming there's not some, massive charge to get involved in those, but if you could rattle off maybe 2 or 3 of your favorites that our folks can research and possibly sign up for.
Yeah, there's, for example, so I mentioned shadow stats from John Williams, and that's specific economic data. So you'll understand what the real rate of inflation is. It's funny, John Williams published, I would say almost 8 months. He was saying the rate of inflation at that time was at 12%. It's gone up since. And then all of a sudden, 6 months later, you have Paul Tudor Jones, Kyle Bass, all these Wall Street guys coming out and say, well, the real rate of inflation is more like 12%. And I'm like, I read that 6 months ago, in John Williams's newsletter. So he's great. Then there's also fantastic information put out by people like George Gammon, Lynn Alden, Chris McIntosh. They have their own little They all have separate newsletters that I consume. There are different, I would say that's more of like market specific and so forth. Real estate, there's a lot of great channels such as this one. If you want to know what's going on in real estate, talk to people that are doing it, such as Michael and everyone on this channel that he interviews. Just writing about real estate sometimes, and I think you probably think the same way too. When you read in the newspaper about it, you're like, none of these people are actually investing in real estate.
None of them are doing deals. You can tell pretty quickly. Yeah.
Yeah. So I would say for real estate, that's the best way to do it. You could get great economic data and trends. And that's another subscription is the Trends Journal from Gerald Celente, which has been the trend forecaster. I've been subscribing for that for about 20 years. He's been way ahead of all this stuff, just giving you data. Because news, I mean, in the past, you just want to know what's going on to make decisions on it, right? I don't want to hear someone else's take or spin or something on that. So just give me the data. Tell me the news of the things that I need to know of. And those are some of the things that help you. For real estate, talk to people that are doing it, that are in the markets, because it changes pretty quickly. So I don't have newsletter subscription for real estate. I just talk to folks such as yourself to figure out what's going on, what does the market looks like, because there's no better information. And I would say this to your audience too. We're at a time right now where the term fake news is now, I mean, it's almost old. It's been around, but there's so much misinformation that your decisions as an investor, and you have to be intentional with this and be cognizant and aware of this. It's only going to be as good as the data and information that you base it on. So it's very, very important, because I see some of the things that are presented out there. The example in our conversation today is the transitory inflation. Folks, if you knew the real rate of inflation and you knew that it wasn't going away, you would have made different decisions. That, let's just say, for the person that said, oh, they said it's going to go away, no, don't worry about it. So you want to have real accurate data and information at this point in time of the market cycle.
Yeah, no, I think that's really, really astute. And we do a ton of research on behalf, of our audience, and obviously bring experts like you here on the channel. But we always, talk multiple times throughout each one of these videos. Go out there and do your own research, folks. Be a critical thinker, poke holes, figure out the good, the bad, and the ugly. There's always going to be, or typically going to be a flip side to every coin. But ultimately, when you're doing that research, you can draw your own conclusions from that. We're always going to encourage people to do that. Make up your own mind, get as much data, surround yourself with like-minded folks, surround yourself with experts, and then make informed decisions. So no, I think that's spot on. So you obviously digest a ton of this information. You rattled off a couple of newsletters that our folks can take a look at. We certainly appreciate that. But you being in the know and you being out in front of the trends, do you mind if I ask what you're investing in this year?
It's a great question.
And what's your investment plan? Yeah.
Yeah. Big epiphany that I had was I was in planning for 2022. I looked at my business plan. I looked at my investment strategy. And then there's a coach that I have that did a quick video, and he literally did a 30-minute video, and everything was on one page. And I looked at everything. I looked at what I had, and I'm like, yeah, I need to simplify. So in the beginning of the first week of the year, I just basically took the week off and just focus everything on simplification. So not just only in my business, but from an investment strategy. So from a simplification standpoint, I literally just put a quadrant down, and I'll share a page. I just drew this up. So you'll see CMCS. So, and I wrote those down, and essentially what it is, and just from a strategic point of allocating things, is this would be cash, this will be metals, cash flow investments is over here, and then the S is more for speculative stuff. And when I talk about speculation, it's more of from the definition that you're positioning capital to take advantage of this politically distorted situations, which I'll share some examples of. So if you look at the first part is cash, I believe right now that you should have at least a year's worth, 12 months of cash on hand. And then the second thing becomes, and this will be a theme throughout this, is it's not only where your portfolio is allocated at, or where your money's at, but who it's with. It's going to be very, very important. So where do you position cash? So there's a couple of things that you could do. You could have cash on hand, which I would highly recommend. Obviously, put that in a safe, secure location. Again, with the threat of a wild card.
Like the mattress.
What if there's a bank holiday, as they call it, right? Talking about marketing, transitory bank holiday. What if there's a bank holiday and you cannot get to your money? Now, folks would say, MC, again, that's a little bit out there. Folks, there's videos of people standing outside of banks in Lebanon and in Turkey throwing bricks at it. At that stage, the money's gone. Throwing that brick is only making the person feel better. At that stage, there's nothing you can do. So have some cash on hand. I, of course, love the infinite banking strategy. We position capital in overfunded life insurance contracts with mutual companies. They've been around since the mid 1800s. They've weathered all of the storms. They've paid dividends, which means they've been profitable since the mid 1800s. And they are very good stewards of capital, and I can access the capital pretty quickly if I need to, with usually 48 to 72 hours. So that's where I put the majority of it. I have some cash on hand. I have the majority of my cash in mutual insurance companies, which I implement and execute the infinite banking strategy. And then also, if you need a place to get some sort of a yield, there are some opportunities with stable coins too. You can earn 8 to 9% by just buying a coin like the USDC, which you can then basically stake on an exchange and earn a nice yield. So you have that on hand too. It's different places. Again, risk management. You look at wild cards. What could happen? Could something happen in the crypto market? Yes. So be mindful then of how much stable coins you have. Be mindful of where large sums of capital are with regards to banks. Have some cash on hand for an emergency. So that's the cash strategy. Then on the other side of it is the metals. So gold and silver, that's insurance. It's an insurance play. It always has been. I always looked at that as insurance. It is anti-fiat, meaning it is insurance against the fiat currencies. And then cash flow. Cash flow is critical, even in times of uncertainty. And of course, from an inflationary aspect, what asset class has produced incredible, not only cash flow, but capital appreciation? Real estate. So I still believe real estate is a great play. I still believe that there's just a great opportunity for folks in specific markets around the country. And in different niches too, right? The short-term rental stuff is just incredible. So I see a lot of opportunity there. I see a lot of opportunity still in multifamily in certain markets, because people need a place to live still, and will always do. And then the fourth part is the speculative play, the growth portion of your strategy. And this is where you capitalize on politically distorted situations. So this is where I would put crypto and Bitcoin specific, taking advantage of a politically distorted situation, regardless of what country you're in. Bitcoin is an anti-fiat. There's a limited supply of it. So it's a hedge against the currency that you're operating in your country failing. So that positions you on the right side of that. Other plays that you could take a look at as, boy, are we going to have a shakeup in the energy markets? So would it make sense to, if you are an investor, to look at certain energy options right there? There are some folks in our network, I've not personally done this, but I'm looking at this, that have looked at, for example, a uranium play, because a lot of the oil and natural gas supply has been shocked. So how do you provide electricity to the rest of the world, or energy, right? Well, uranium is only approximately 10% of it. Huge upside potential there. It's funny that because most folks know this already. And again, it's a politically distorted position. You're not going to provide energy to the entire world on solar or wind. Something else is going to plug into that. So would it be nuclear? Would it be uranium? A lot of folks seems to think so. So it's just interesting from a politically distorted position to capitalize on it as an investor. The other thing is agriculture. Do you think agriculture is going to there's going to be a demand for food, for agricultural products. There's shortages everywhere. There's going to be a huge demand. So there's different ways to position yourself in that too. You can directly invest in farmland, which a lot of people that I know have done. Also a real estate play. You can buy or invest in fertilizer companies. If you don't have fertilizer, folks, you don't have agriculture products. So it's like, what comes first, the chicken or the egg, right? So those are some things to think of. And I know I'm just throwing out some ideas personally on this, on the S. For me, I look at the anti-fiat if there is a financial or a currency or a banking crisis. So, Bitcoin is the anti-fiat in that category for me, but other folks might be interested in different other speculative plays, whether it be energy, whether it be agriculture, even carbon credits, right? I'm doing my research on that, still doing a lot of studying and just getting up to speed of what it is. Because a lot of folks have told me, MC, you should be aware of this. So I want to be at least knowledgeable and get up to speed as an investor of what it is and how it will affect capital flows, because money is always flowing from one asset class to another. So that's kind of the four. Do I expect all of them to do well in any environment? No, I don't. I expect at least one of them to go down where other three go up. So let's just quickly throw out two scenarios. In inflation, in a more, I wouldn't say hyperinflationary, but super inflationary event. Yeah, cash is obviously going to need to be moved into different areas. Your gold and your silver will do well. Your real estate will do well. And obviously then your Bitcoin will do well, right? Your speculative play as it will, or your growth part of your portfolio. But what if in a deflationary event? What if a wild card event happens? Well, markets crash. What would that look like? Well, obviously the growth part will be impacted, maybe slightly your cash flow portfolio too, depending on how you set it up. Your metals will be there, but you'll have cash to then go in and capitalize and buy other positions up. So that's one way, that I'm looking at it. I'm trying to simplify it and just have it all on one page. So that's my theme for this month and for this year is to keep things as simple as possible.
No, I love that. Kiss, keep it simple, silly. I subscribe to that as well. And just looking at that little chart there, and I love that. It's given me flashbacks to the early Kiyosaki days with Cashflow Quadrant, which was one of my initial business books that I read that really was kind of give me some of those light bulb moments. I know that that's one that you've got in your library as well. You've touched on a couple things there as far as the inflation hedges. Love the silver, love the gold, love the crypto as well. Let's talk about Bitcoin. Obviously, it's been pretty dang volatile. I haven't checked it today, but has taken a big time downswing. I've continued to buy it. So we'll drop a link below. We did a video on dollar cost averaging that Matthew did sometime last year. I'm a big subscriber to that. What are your thoughts on that for someone that's either involved in it now or looking to get their maybe stick their toe in the water while the price is down? Any advice either way?
Yeah, I think the fundamentals have only gotten stronger. If you look at what's going on within crypto and specifically Bitcoin, and as an anti-fiat, if the rest of the world is just inflating the currency supply, Bitcoin is a limited supply, obviously. So the use cases have just increased. You had corporations allocate large amounts of capital to it after private investors did. Now you're having countries. So I could just see the adoption increasing. And there's more countries actually now looking at making Bitcoin legal tender, just as El Salvador did. So the fundamentals, and if you look at the Bitcoin, and not to get too technical, but if you look at the hash rate, it's actually increased, which is very, very good. So the fundamentals are solid. It's a very volatile asset class. So big pullbacks. If you're new to this and you cannot stomach something dropping 60% on you, it's probably not your asset class. It has had a pullback from 67K back down to 40, almost 39. I don't know where it is now. But I wouldn't be surprised if it goes up to 100 and falls down to 30 again, in the next couple of years. Would not surprise me at all. Very volatile. The more big institutional players that come into the space, the less volatile it would be. It's still very new. When folks think, oh, it's been around for a long time. No, you're still early. So number one, I would say, never invest in anything you don't understand. So if you're new with Bitcoin, what I did, somebody said way back to me, he said, MC, just buy $500 of it, set up a wallet, play around with it, learn it, do your research, figure it out. And that's what I did. And then I deep dive into it because and I spent about, almost a year just immersing myself in it to understand what it is before I put money into that. So never invest in something or allocate capital into something that you don't understand. And then the other thing that I would say from a Bitcoin standpoint, the fundamentals are solid, the adoption is there, and it's a great anti-fiat strategy, in an inflationary environment and in a global economy where we see countries devaluing their currencies at record rates.
Mm-hmm. No, I appreciate that answer there. Guys, if you want more information like this, you want us to continue to bring experts like MC here on the channel, go ahead and smash that thumbs up button below. That lets us know we're on the right track. We love having MC on here. He's just an absolute wealth of knowledge. You did touch on infinite banking. This is one of the more intriguing things that we consider you obviously an expert at here on this channel. You've helped a lot of our folks get these policies going. For people that have no familiarity with IBC, the infinite banking concept, can you kind of give a 30,000-foot view of that and then kind of drill down on that a little bit, and particularly right now, how that would relate to being just a phenomenal hedge against the inflation that we're going through?
Yeah, so infinite banking is essentially where you use a life insurance contract, a dividend-paying whole life insurance policy with a mutual insurance company to position capital in. It's a very specifically designed policy, high cash value. So it's not the the Dave Ramsey, Susie Orman whole life policies that we're selling. So we designed this just like they design it in family offices. So it's specifically set up to position capital, and by positioning capital in the policy, you can essentially implement the same strategies that banks do. One of my mentors, a great man, Nelson Nash, wrote the book Becoming Your Own Banker, and he always talked about, MC said, there's one pool of water literally on this planet. You have all the oceans, they're connected. You have all the rivers connected to the oceans, and then you have underground water connected to the rivers, connected to the oceans. And when the earth heats up, there's condensation, clouds form, it bursts, the rain comes down to the earth, and where does it go? It goes into the oceans, which is connected, the rivers connected to the oceans. It goes into the ground, which then goes into the underground water, which is connected to the rivers, connected to the oceans. It's literally one pool of water. The banks have done the same thing, where if you think about it, there's one pool of money, essentially, because whatever we do, the money ends up in the commercial banks. We go out for some dinner and some drinks, we pay for it, and the money goes from my bank account to the merchant account of the restaurant, which they then pay their employees, they pay their suppliers, goes into their accounts. The money always comes back to the commercial banks. So they figured out this pool of money, this one pool of money, which they built for themselves, essentially, because money could go out. We could get a loan somewhere to buy real estate. And then guess what? The check is deposited or transferred, the money from one account to another account. So how do you do this yourselves? Well, we figured out how you can build your own little pool, which keeps money and all the interest that you're paying to third parties within your own little pool. So money would go out, but it always comes back and your pool continues to grow the same way that commercial banks do. So that's essentially what we've done with the infinite banking strategy. It's pretty powerful stuff. And what it will do is it's a great place to position capital. It's a savings vehicle to where to position capital. So I mentioned on the cash side, I don't keep a lot of capital in the bank. It's all in my policies because the money's guaranteed. It's growing tax-free. It's earning dividends tax-free. I can get policy loans tax-free by borrowing against my cash value in the policy, just like I would do against borrowing against gold and silver or a HELOC with real estate. And of course, the death benefit is tax-free from an estate planning side point. So the compound interest equation on taxes it's the biggest check you'll ever write, right? You want to be on the opposite side of this. This is just one of the tools where it puts you on the opposite side of a compound interest equation, whether it be by growing your pool of capital or the tax game, because the money in there is obviously growing tax-free. But it's a very, very, very powerful way to take control and manage cash and cash flow within your own economy, your business economy, and the investment economy. And it's going to put a little bit of rocket fuel on what you're already doing in your business and in your investments.
Yeah, no, I love that. You know, we've had just tremendous feedback from folks that have gotten involved, and they've talked to you and your team personally. And I love the fact that every one of them is custom built. You know, it's not just that one size fits all approach. It's going to be based on kind of really the, you know, short and long-term goals of the policyholder. I love that it's not a, you know, a Wall Street type deal. Obviously, that's so it's not beholden to, you know, a board or, you know, other investors. So there's just so many benefits for it, and particularly right now, guys. So, you know, inflation just has so many question marks around it. The only question mark that there really isn't is it going to stop right now? And the answer is just unequivocally no. Any expert out there that really, you know, is worth their salt in the industry is predicting that it's going to continue to go up. So if you haven't done so already, people that are watching this video, reach out to MC and his team. You can reach them at ninja@vipfinancialeducation.com. That's ninja@vipfinancialeducation.com. They'll talk to you about this infinite banking concept and the whole life insurance policy, and see if it's a good fit. Who would it not be a good fit for right now? You know, even in spite of the inflationary times that we're in, you know, who would not be a great fit to just dive in, just to be diving into it?
Yeah, there's some folks that they need to first have good financial habits in place, saving at least 10% of their income, you know, and so forth, and be able to put at least $10,000 into a policy like this annually. So you could pay it monthly, quarterly, annually. That'll make sense for them. But yeah, if everything starts with you, right? So you need to have good financial habits in place first before you start adding other things, because otherwise it'll amplify what you're already doing. So if there's bad habits, it'll only amplify it. If there's great, good savings habits, you know, all the other things that you bring into your life is going to amplify that too.
Yeah, no, I think that's spot on. So we always try and say, you know, who would this be a great fit for? You've shared that. Who would this not be a great fit for right now? You just shared that with us. And that doesn't mean that they can't do so down the road, but it's all about really just developing those good habits, like you stated right there, getting in that right mindset. And that can take some time, you know, particularly people just starting to get into the, you know, investing world, or just now, you know, starting to prepare for retirement. So again, just reach out to MC and his team, see if it's a good fit, get more information. That's going to be ninja@vipfinancialeducation.com. MC, we're going to go ahead and draw to a close. If you don't mind, we're going to continue to bring you back here on the channel periodically and share your wealth of knowledge. Obviously, you know, times are going to continue to change, and we'd love to get your input and have you weigh in on some of this. So guys watching from home, smash that thumbs up button below. If you love this content, you want us to continue to bring people like MC on the channel. If you're not a subscriber already, go ahead and ding that subscribe button and that bell notification. That's going to give you the heads up as we bring more great content on the VIP Financial Education YouTube channel, where we talk about all things credit, capital, and cash flow. Until next time, take care and make it a great day.